So I've been away with my clients. I already informed them that I was away for the 2 days. So on today itself, okay, so on Tuesday and Wednesday I was away. So Thursday itself, I'm just back. Okay, however, I had to clear some backlogs first. Okay, because of the past 2 days I couldn't do any work. So today I had to clear up all my backlogs, and hence today, okay, instead of doing the usual morning or afternoon sharing, tonight I take this opportunity another 30 minutes towards the next day. I take this opportunity to do my sharing as well lah. Okay, as per promise, I will always be here every day. I apologize if let's say any guys who have been ask or wanting to ask me some questions on Facebook or YouTube, okay, who are unable to because I'm not online, okay. But however, okay, if you have any questions at this moment, okay, do drop any questions in the comment section below, or you can just drop me a text. However, since I'm doing a live here, my handphone is somewhere around the room, not sure where. Okay, just feel free to drop a text. Just drop a question on the comment section below. Okay, so for today's topic, we will be talking about buy first or wait first to buy. Okay, in today's market, in today. I mean, in 2022. Okay, there is a lot of uncertainty. Okay, not many people are asking. Okay, should we wait for the price to go down, or is the price too high, or will there be any effect on the war or the interest rate, the high inflation? Okay, whether should they wait first until everything is cleared, then then buy, because they are scared. Everyone, okay, everyone, even myself, okay, we are scared to buy something of a higher value. Okay, buying something that is higher than what is supposed to be like the value. Okay, but okay, there is a risk, okay, on investment. Okay, there's always a risk. Even if let's say you go to a supermarket, or you even if you buy things online, or online especially, okay, you always compare the price. You do not want to pay, you do not want to be the person who buy something that is overpriced, that can be sold somewhere. So as even I understand, especially for property is such a big purchase, okay, everybody would be wanting to wait first. Okay, of course we have that, more the reservation in is magnified. Like if let's say for example you are buying a laptop for $2,000, you'll be searching online, okay, which is the best value for money, the best buck, the best bang for the buck, they say. But of course, if let's say the property costing almost half a million, or even a million, or 2 million, 3 million, okay, of course the magnitude of that conservation you want to put in us is also very prudent. Okay, it is important as well to take a step back and not rush in. Okay, but however, any investor would know, okay, in any crisis, in there's a lot of disarray, there's a lot of noises. Okay, never let a crisis go to waste. Okay, because in times of crisis, usually fear and insecurity comes. Okay, and people are always either cashing out first, okay, cash out first instead of holding. They will be doing very irrational things, okay, because of the fear making them do irrational things. Okay, if some of you have followed the stock market for the past 2 months, I believe the stock market was going down ever since the Fed, or the US Fed, the monetary system in the US was saying, okay, they will be increasing the interest rate, and they were showing data about the inflation. Okay, the stock market actually plunged. If you know, like for example, Facebook, Meta, when they changed their name, suddenly the price went down so much. Okay, I'm not sure how many percent. I think it's about 50, 30, 40. I can't remember. I don't buy Facebook stock, so I don't really in tune. I usually, even if I buy, so I don't usually look at the stocks or whatsoever. Okay, because if that's the case, okay, that is when I want to come in. Okay, take a step back, and straight away, the step back is considered like for example, like a catapult like that. Is means you see there's a crisis. Okay, you step back, means you getting ready to launch. The step back is like getting ready to launch, okay, then launch. Not just step back, hold, then the target run away. That is important. During a crisis, especially during this time, I believe there is a lot of opportunity currently in the market. Okay, the interest rate, the high inflation, the Ukraine war and Russia war. Okay, apologies. Okay, for the past 2 days, I have not been reading the newspaper as well. Okay, I'm not updated with the news. Okay, because I was really I had a full day lessons. Okay, from 7 to almost 1 a.m. So we didn't have a chance to even catch up the news and so forth and so forth. But that is another story for another time. Okay, but today itself, I want to share with you whether we should wait first, or buy first then wait. So that's the topic for today: buy first and wait, or wait first to buy. Okay, so there are some charts that I have that I wish to share with you guys. Okay, just give me a second. Let me share the screen. Okay, I hope you are able to see the screen. Okay, so here you can see there are actually the blue lines here. Okay, the blue highlighted places. Okay, is actually showing all the downtrends. Okay, that the crisis that happened previously. Okay, where we get this chart is actually from the URA's price index, and it's actually from Propnex research team lah. Because Propnex has a very strong culture of sharing, and so this is where I get it. So I have to credit, okay, the Propnex research team, okay, and URA for having this data. Okay, if let's say you want to see the data, you actually can go to URA website. Okay, it's a open data, you could also can see. Okay, so this is the source I got it from, Propnex and URA. Okay, so more importantly is this blue highlighted area. Okay, this period, if you see this period and this period, okay, all this blue area here. Okay, all this blue area actually signifies signifies the thing that happened in the property market. Okay, this is the Asian financial crisis. Then we have the dot com and SARS. We have the global financial crisis with the Lehman Brothers and the housing. That is the most recent one, in 2008. Okay, then we have the 2013 cooling measures. Okay, the blue one here, only the first quarter we see a downtrend. Okay, so let's focus from 2020, before 2020. Okay, you see the prices was up, then because of the crisis it went down, then it went up again. Okay, then when because of the dot-com crisis it went down. Okay, then the prices, see, when it's down, when you are the person who buy here, okay, you see how much it went up, almost 58%. Okay, if let's say were to buy here, your property earnings would have already been 58%. Means if you buy a property at 1 million, you have already easily made $500,000. Okay, but property doesn't work that way again, because we don't pay full cash for the $1 million. We actually loan. So actually you put in maybe $250,000, but you make 500,000. You see the beauty of property. Okay, in stocks, let's say we're saying that, oh, you make 50%. Okay, 50%. Let's say I have $1 million, 50% of $1 million is $500,000. But then, how many guys out there? Okay, how many of us out there have actually $1 million in cash? To just okay, to just invest in. Okay, but property itself, okay, you can actually loan that amount. Okay, and if let's say you have bought in the dot-com bust, okay, 58% can easily translate to almost double of your profit. Okay, for example, I give you the example: you buy a $1 million property, you actually get earn 25%, which is 250,000. Okay, but during that time it's not even 25% that you need, maybe 20% that time. Okay, so uh 250,000, okay, and because that 1 million property managed to generate a profit of 50%, okay, and you make already another 500,000. So your 250,000 investment initially make you up to half a million. Okay, not considering the rental price, your the rental incomes you get. Okay, but however, if let's say you don't exceed here, okay, then because of the global financial crisis, okay, 1 year the prices went down almost 25%. Okay, it was quite scary also that time. Okay, but then at the low it went up all the way, and you see 62%. Okay, then when the government started to intervene because the prices was going very fast, very high. Okay, so the government, what it did is okay intervene. Okay, then after that, when people start to realize that, okay, these cooling measures is not going to to be, cut off soon, or going to be abolished soon. Okay, prices started to went up actually. Okay, go up until now. Okay, so if you see, if let's say if you are a investor, one thing, okay, or even a homeowner, okay, if let's say there's a crisis, okay, and if you are homeowner, okay, sorry, okay, if let's say you are investor, or even if you are a homeowner who can buy, why wait? Okay, because in any crisis, if you see, if you are the guy who buy, you tend to make money in the long run. Okay, we are not talking, if let's say we are talking about investing as well, okay, your uh, investment horizon should be at least 3 to 5 years. So property itself, okay, we have the seller stamp duty in place actually. Okay, actually what the government wants is genuine buyer, not scrapers. Like stocks, we have people, okay, you buy now, in like 2 minutes, 1 minute later you can sell even. But for property itself, okay, you must have the holding power and the capital to invest. So so one thing is, the asset class is so, uh, the foundation that was placed on a property, to buy a property, is very solid. So a lot of people likes to buy property because of that solid foundation that has, okay, you have to put in the 25%. You have to, that you have to make a certain amount of money to own a certain amount of property, etc., etc. Okay, and if you see, okay, the lowest low, sorry, the highest high, the next high is always higher than the previous high. If you see, if you buy at this, maybe, okay, you say, oh, maybe I buy at the highest price, but then if you see, the next high itself is actually higher. See the thing? And if let's say you are the guy who buy here, the price, the next high is here. Okay, now, okay. So every high is always higher than the previous high. Okay, for property, you see, if you are here, okay, you bought, or you think, I think I buy at the highest peak. I don't want to buy because maybe this is the highest. Okay, you might be thinking, oh, this might be the highest price that the market can be. Okay, then you keep thinking that, then you decided to wait and wait and wait. But we do not know, okay, until when you have to, even if you buy at this point, at the highest point, if you see the price tends to go up. Okay, and if let's say you buy here, see the next side is also here, the next side, and you see here in 2013, if let's say you buy at the highest high, okay, when it's very, the market was very hot, and you see, during that time the showroom had long queue, people wanted to ballot, even there was days where they will fight inside the showroom just to get that house. You know how intense the property market is when everybody is like, COV is like rampant everywhere. Even like now, okay, even at this period when it was so hot, okay, the price also went up also. So means that the current high is always higher than the previous high. So it doesn't matter whether you think, today is a crisis, okay, a lot of insecurity, a lot of fear, a lot of insecurity, a lot of fear. you know, people might be thinking, let's wait lah, let's wait. Actually, for property itself, you just need to plant the seed first, okay, then wait for it to reap rewards to you. So of course, I always tell my clients that actually property is a very unique class of asset lah. I believe in this asset, okay, because Singaporean itself, our government itself is very pro home ownership, and that's why they want to promote you to buy homes. And because a lot of people buying homes, you know, and that is where investor come in. And as a Singaporean, we also have an edge over our foreign investor because we do not need to pay the ABSD. We ABSD itself already, I think it's already one of the biggest takeaway lah. We save almost 30% of our $1 million property that we own today. The foreigner who wants to buy that property has to pay 1 million and 1.3 million just for that property. So if let's say we sell at 1.3 million to anyone, okay, for them it's just to break even. For us, we're already making 30% in that property. So which is 300,000, which is quite a substantial amount of money. And you only need to put, for 1 million property for today, you will need to put $250,000. And you know, and your phone, and if you sell at 1.3 million, it's already 300,000. So yeah, I think property is the way to go lah, in that sense. Okay, other you can, of course, it is always a journey to own a property. It's not like as if, oh, today I feel like I want to buy a property, okay, I will buy. Okay, it takes step. Yeah, you need to have some savings, substantial amount of saving. You need to be working at least for a few years first before we can start. But however, you need to start now in planning what houses or what kind of property you have to own, okay, how much I need to save, or at least gain some knowledge with regards to the property market. Okay, so with regards to that, actually Propnex itself has um is okay, Propnex itself is actually holding a property expo. Okay, let me share you the screen again. Okay, so it's happening on the 2nd and 3rd April. Okay, it is a very, very informative place. Okay, a lot of uh, industrious expert lah in Propnex that will be sharing their knowledge with the people. Okay, it is a 4 day, full day event. Okay, there is so many takeaways. Okay, you see on the second, there will be building strong and steadfast passive income for your property investment. Okay, this is quite interesting. Okay, how three major pitfalls homeowner make and how you can avoid it. So there is a lot of takeaways or a lot of session here. Okay, almost can't. So yeah, you can either watch it in Zoom or you can actually go down to the live event at Fukama Hotel. Okay, I would not be able to come on Saturday, but hopefully on Sunday. Okay, my schedule is quite free, so maybe I would want to go to one of these event, because I think it's quite interesting. Here. Okay, so it's Sunday. It starts from 10:30 all the way to 4 p.m. Okay, so it's a 6 hours event. Um, okay, let's see. Yeah, so you can choose whichever that you like to go. Okay, if let's say any of my friends in Facebook here would like to go, just text me. Okay, maybe I will join you. I would join you. Okay, to be at this event. If not, I would be there. Okay, just choosing, just if let's say no one wants to go with me, then I will just choose one of the more interesting one. I think this blueprint for a highly resilient property portfolio to foolproof your wealth. This is quite interesting. Yeah, so maybe I will go for this 2 p.m. one, so just enough for lunch. And but however, okay, it's a free webinar, free pass. You can go down here and view and watch it at the comfort of your home. Okay, but however, if let's say you want to experience the full impact of it, okay, because now the everything has been relaxed, and you think that okay, you can have better takeaways when you're having lesson in front of you, face to face lesson. Okay, you can come down to Furama. Okay, maybe I can meet you there. You can have a chit chat for a while, and so yeah, so that's a bit of my sharing. So if let's say you guys have any questions at all, just drop me a text at 94508 732. I'm so sorry if I bothered you in the middle of the night. Okay, hope you have a good day, and I hope to see you guys again tomorrow. Bye bye.